My name is Ryan Jennings. I'm from New Zealand, as you could probably tell from my accent. My background when I used to live in London was to connect all the stock exchange. I worked in telecoms. We digitised the links between each of the stock exchanges and then helped build some ultra-fast trading platforms so people can trade really fast some of these derivatives that then eventually caused the credit crunch. But I got really a lot of money from it, and I did really well, right? So I was really happy, but I wasn't aware of these unintended consequences that have just been talked about by Anna. And some of my friends went on to other really successful jobs, producing 1 billion cigarettes a year, and some of them now work in oil and gas, and they do an amazing job at creating entirely new ways of building proven reserves of carbon dioxide in the ground. I didn't. I went back to New Zealand, had a little boy, Joseph, and started working with some really cool small businesses because I wanted to give back to my home country. So places that produced meat, like farmers, places that did really good takeaways, like high fat, high sugar. But again, I hadn't really made the connection that what I was doing as a marketer was accelerating all of these bad things. And it took a course by marketing guru Seth Godin earlier this year, who said, what are the things you're working on and are they really mattering? So while I helped build the internet in the 2000s, now the big challenge is climate change. And I think the big challenge for climate change, which I know not a lot about, to be honest, it's not the knowledge gap. It's got a branding problem. Because the first thing any of us do when we hear climate change is you've got two options. You can either, we've got to do something about it, or party, right? It's over. Get the champagne, go to the front of the Titanic, and enjoy the next 2 to 4 hours, which might be 10 to 20 years. But that's not going to help my boy. It's probably not going to help your kids or grandkids. And at some point, they're going to ask you. That's the point that you want to be ready for. So the long way about this is my project is to create a Netflix-style 12 episodes on profitable climate solutions that looks at the arbitrage between what's happening now that's bad and what that means, and try and strike some of the neurological fear into how pension funds and investment is currently done. And if they were to dig up all those proven reserves, what that would mean. 2 weeks ago, £900 million was divested out of fossil fuels in New Zealand through this very same tactic. And if that tactic can be used on some of the larger stock exchanges, then it frees the capital up. Then the smart people that, because I completely agree with you, the smart people that don't believe in climate change, they'll just start looking for a return. Because the thing they were getting a return on has now got too high a risk profile. So that's a long way about saying that.
That's just way too sensible.
So I'm Steve Podmore. 11 years ago, I started a journey and to basically create a globally focused impact investment bank. It became called, or we also called it a private sector development bank. And I worked on it for 8 years. And we just couldn't get it away. 3 years ago, I decided to put it on hold. It's not dead, it's on hold, and tackle an underlying problem that I discovered in that time. Basically, we're launching now a project called BIGCrowd. I've spent 3 years working on it, and BIG stands for Big Impact Game Changers. I've been in the past session, and listening to you, I just wanted to jump up so many times. Not to punch you, but well, a couple of times maybe. So I have some agreement and disagreement. I love impact investment hugely, but it's a rounding error. It's tiny. The answer isn't just to throw money at it from government, etc. I actually think impact investment is the missing middle. It's the bit that can address market failures, social, environmental market failures, where conventional markets don't go, and it's not suitable for charity. Although it's true, some impact investment is about making charity more efficient. But really what I think the issue is, and I think that very, very few people understand, is to tackle climate, we need tens of thousands, hundreds of thousands, maybe millions of projects, ventures, policy ideas that come to fruition. Everyone wants investable deals. They want them wrapped up and packaged very nicely with a nice bow on them so that the information's all there and it's very easy to do. That's capacity building, and no one wants to do that, and very, very few people want to be first. So that provision of intelligent risk capital is where I believe the impact investment arena has to scale up massively. And it can do that with certain system innovations by blending capital, taking and creating fund structures that share risk appropriately so that many projects can fail and so that from them some emerge that can succeed. And on that basis, investors can still make money with the failure. But in terms of the rate of return, it's important to recognize that governments sometimes, there's 270 multilateral development banks in the world, or DFIs. They are siloed. They're not accessible to most, but they've got capital that they are providing and want to provide. Governments want to underwrite debt. Philanthropy wants to get involved. So when capital can be blended together, people can take more risk and they can get return, but they can get the impact that they're seeking. And more importantly, on the flip side, all of those projects that need risk capital to find out whether they are capable, whether they are project ready, whether they are able to take more money, they can get the money they need. So that's what my latest project, BIGCrowd, is about addressing. So it's kind of an agreement, but there's some points that everyone ignores the elephant in the room, that the capacity building has to be done. Investable returns equals risk. Risk equals loss. How do we enable that loss to be taken? Amen.
Any questions?
Hello?
Oh, sure.
Brilliant.
There is a cryptocurrency that's called CO Term that's going to launch just very soon, and just recently launched. So if you search for cryptocurrency and CO Term, I'm sure you will find it. You can have a look at it. But anyway, I was thinking about, you were talking about the new financial system. And I think with blockchain that's going to be able to happen. For instance, let's say you have a car and it's worth let's say 15,000. And then in the blockchain as a common agreement that due to their mileage and the age and the service they have, they reach like 15,000. And then I want to borrow money from you, like 1,000 pounds to buy furniture on IKEA. Then you're going to be able to lend me money directly without any banks involved. And then I order the money from IKEA and they ship it to me after we have written a smart contract and agreed on the terms of it. So these things will come due to blockchain. So that's just comment. That's a comment. It's a comment. So it's not just like about the financial system as it was with blockchain technology. There will come other types of financial services attached to it.
Can I just add to that? Sorry.
Yeah, go ahead.
I mean, I completely agree with the young lady in the middle. I mean, first and foremost, it's not a joke. It's quite serious. The fact of the matter is that we have 2 billion people. That's 2/7 of the world population. Currently, doesn't have enough food to eat. And one of the main reasons of that, being coming from an agricultural background myself, is that we currently feed 56 billion animals every single year, and they're sent to slaughter. Why do we feed 56 billion? A cow eats 4 times as much as a human being. So why do we feed 56 billion animals every year, and we can't feed 2 billion human beings? Well, it's simply because you can't profit off the carcasses of human beings. You can sell a cow's meat for profit, but you can't sell a human being's meat for profit. So this is a very serious issue where we've kind of lost our humanity and our morality due to very bad influences from capitalism.
Well, wait a minute. Hold on a minute. No. I mean, you got me. You're like 40-year vegetarian, right? So I'm into it. In fact, being vegetarian is probably one of the most positive social and environmental
I'm a vegetarian myself.
So I mean, so but that's a personal decision. I want to explore that a little bit. That is it demand or supply? Is the supply creating the demand, or is the personal decision creating the supply?
It's both. It's both.
You think?
It's definitely a combination of both. 100%. Meat tastes nice. Meat is a great.
If meat was prohibitively expensive, people wouldn't eat it.
Exactly right. I mean, we see this all over the world. In markets where meat is scarce,
the subsidy of that activity kind of perpetrates the bad. Is that? I'm not. That's a question, not rhetorical.
Well, you know, it's
There's
cheap
subsidy
food.
in there.
It's cheap food. When you can go to McDonald's and buy a hamburger that's got a beef patty in it, lettuce, and bread made from wheat, that's £1 in comparison to fresh produce. It's much cheaper. Obviously, if you don't have much money and you want to save money, you're going to go for the hamburger.
No, I get it. So I want to say one thing that kind of ties in what you were saying about environmental.
No, of course, but I haven't even finished my point. So we digressed completely. And the original
got me on
blockchain.
But it's just a supply-demand thing that kind of like.
So what's the point? Yeah, let's get to the point.
You know, the point of the matter is that blockchain is coming. It's going to make everything cheaper, faster, and more effective, and it's going to open doors to the whole world. I mean, I've worked in projects where 12-year-old Vietnamese kids are able to supply more and provide more to coding projects and build whole infrastructures. More so than people that have been in the business for 40 years and have been coding since the 70s. So really and truly, blockchain is the future. It's coming. It's going to be a steamroller, and you can either be like the naysayers back in the sort of 90s or late 80s that said computers were only going to be used for storing kitchen recipes, cooking recipes, and so forth, or you can embrace the change and jump on the train because it's happening. And it's a really it's going to change the absolute infrastructure of absolutely everything, from the way you use your phone to the way you use computers. And
the kid's just poor. He's not stupid.
Exactly. He's poor, but he's going to be
not
rich.
stupid.
He's going to be a multi-millionaire.
Were you addressing Anna though? Because you were saying addressing the young lady in the middle.
It's the whole panel. It's the whole panel. This is a FinTech discussion.
Was it the point around speeding up a system that's already too fast that you were reacting to? Was that it?
Well, no. I mean, we're We're reinventing the system. We're revolutionary.
Okay, hold on. So I get what you're saying. So I really want to go to one of your points, and you actually made some very interesting points, painful as they might be to hear from you. But one of them, now I study economics and environmental science. Actually, I went to their parties because they were better. But there's a thing, it's called externalities. And so, it begs the question of the function of government. Now, markets are not efficient. They're absolutely, no matter what market system, not efficient. So part of the function of government is to bake in or tax externalities, which means if your neighbor sets up a smelting plant and gives you lung cancer because you live next door, and he does it really cheap, there's a cost to give you lung cancer. And the government, it's up to the government's job to say, hold on a minute. It looks cheap to build a smelting plant there, but when you factor in the externality of your neighbor's lung cancer, I go, you're priced out of the market, pal. That, we need a conceptual understanding of that, so that we can push for that the baking in the externalities, so that the true cost of these things, actually to your point, the true cost of these negative kind of things are realized or understood.
So just to address both of your points, I think you made some very interesting points, and what I would say about meat is I think it shows a really interesting intersection between cultural norms and the market and the financial system. And I don't think I really want to say any more than that, except to say that the idea that the price is the determinant of value is exceptionally culturally shaped. And I think meat is a good example of that. And that it's a two-way interaction, actually. On externalities, yes, that's one view of externalities. That is a certain view that says it is business's job to ignore so-called externalities, and it is government's job to factor them in. That is literally one view. I don't think that's necessarily the right view. And I think the interesting thing about climate change...
Now, wait a minute.
Excuse me, I've got the microphone.
I didn't say business job to do that or to ignore it. I didn't say that. That neighbor did it. That was an individual choice.
It's not business examples.
Could I actually finish my point? Thank you. Sorry, token woman, I'm going to stand up for myself. So what I would say is this. The idea of externalities is rooted in a certain concept of enterprise. Now, that is an ideological concept, so, and sorry to go heavy on this, but I'm not going to argue for one or the other. All I would say is that the idea about who carries the responsibilities for the external impacts of certain business activities, that is not a fixed idea. That comes from a certain view of how liberal markets work. And what I would also say is that actually the interesting thing about climate change in particular is it shows how externalities actually aren't that external. Because once you start looking at the long-term trajectory in terms of investment in fossil fuels, you actually find that, guess what, the environmental impacts of an activity actually impact on its economic viability. So if you want to actually avoid catastrophic climate change, you have to keep certain fuels in the ground. If they keep in the ground, they are not economically valuable. So for me, actually, that is one view of externalities. Hopefully you have some more examples, but I don't think that this view of the idea that business as business creates impacts, government then mitigates those, is necessarily something that served us very well.
Totally agree. So to your point about so here's an exact example on externalities and the politics around it. So in New Zealand, 3 days from now is the election. There's 6.9 million cows in New Zealand, and it's up 1 million since 2002, which has been great for the farmers. They've all made loads of money. 60% of all rivers are now polluted in New Zealand, which the externality of that was it now hurt people because we had polluted water. Plus the pure New Zealand brand got tarnished, and now here I am telling you about how unpure New Zealand is. But worst of all, the tourism infrastructure and the tourists coming there were finding dirty rivers and waters. So those externalities, they have an immediate risk. Now, what will determine in 3 days' time which party gets in is based on water quality. But it shouldn't have got to that. But you're right, it's all externalities. And so the party that's going to get in has put a price on it. And that's to your point, right? You need to put a price on it so that people can then value it and buy and sell it.
Thank you very much. Externalities is the phrase I would use. I wasn't sure if everybody would understand that. I think the solution to all the problems will be A, making sure that externalities are allocated, and B, that externalities are priced and valued correctly. How do you think we can do that?
These are personal decisions. I mean, I've got a question. How many people know their portfolios?
Sorry, before you carry on, I wanted to ask a question ages ago.
Sorry, I didn't see it. So come up to the front, take a microphone.
Can we just hold on? So we've got this
All
lady's
right,
question and your
All right,
question, but please wait.
So I hear there's no answer to that, right? But I want to know, how many people know what their portfolios are, and how many of investment, and how many people know whether their investments are in negative impact companies? How many people know that? Okay, that's like a modest sample size, small. Imagine the general population, man. It's a rounding error. Nobody knows. Nobody cares. But to your point, when people become aware that what they do on a personal level, whether they go to McDonald's or whether they buy that salmon or what they do has a negative social impact, then they won't do it. It'll change the economic dynamics. When people look at their portfolios, just like Harvard did, and say, we don't want to be in South Africa until apartheid's over, they change their behavior, right? That's what it takes that on that level. And then when people start thinking that, they look to the government, they say, this petroleum company is really powerful, and as an individual, I can't just stop buying gas. It's not easy for me, right? But I can lobby my government to say, we need to start adding some externalities into their production here because they're polluting the water in New Zealand or whatever. And so we need to lobby for that. But it takes a political movement to put pressure, because some of these places are so big, you can't do it individually. You can do it in your portfolio to some extent, and you're advertising or you're making awareness to the population, if I'm not mistaken, it kind of drives that change of investing behavior. So, I mean, congratulations, you're taking a very advanced step to look at your portfolio and see what's involved in it. And more people need to do that.
Can I just have to interject? So, personal behaviors, we're hit by more and more information on a daily basis. And people use brands, heuristics, to make their decisions. So if you actually look at the advertising and communication world, and look at the products that get sold, very rarely, greenwashing is a term that's been around for a long time, and it's just become more and more, more of an issue. Look at the election, look at, the states. Fake news, fake information. So people's ability to process all of this data is extraordinarily limited. So I agree on some levels personal behavior is absolutely everything, but as to going and checking people's portfolios, it's incredibly boring and complicated for most people, so they ain't going to do it. They're trusting the brands that they're buying into, they're trusting the banks, the investment managers, the asset owners, of which they're often the beneficiaries. So ultimately, pressure has to be applied, yes, through regulation, but yes, through responsible corporations, responsible NGOs, to make sure the standards are set. Going back to the accounting, Bobby Kennedy in '67 said our GDP measures everything that is not, or that takes away value and ignores the things that adds it. Paraphrasing extremely, this is a couple of months before his death, and just look at that video, and it's still amazing, and it could have been done absolutely today. So we need to look at our accounting systems, the mechanisms that we measure these positive and negative externalities, and yes, we have to bake them into our processes at every level. So I'm sorry for partially disagreeing. I think personal behavior absolutely is central, but we also need to have it on an organizational level, right through our responsible corporations and our governments and our NGOs.
Well, there's that guy.
Sorry, what did you want to ask at the back?
Yeah, well, you had a cap. Who's the cap guy?
The gentleman right at the back on the right.
Could I just come back?
Yeah, sure.
I will promise to pass over to you straight after this. I'm sorry you've had to wait. Okay, well, we're going to come to you in a second. I just wanted to because I wanted to try and answer your question a little bit and maybe just offer a slightly different view, which I guess you've noticed is my trademark. And all I would say is this, is that, yes, personal choice is important as consumers and citizens, but organisations are made up of people too. There is literally no law that says they have to prioritise, for example, shareholder value over others, neither in the US nor in the UK. And so that, again, is an example of a cultural norm that influences corporate behaviour. And so all I would say is if individuals are capable of making decisions about what they want their money to do, then equally companies are capable of applying wider values than relatively short-term profit to the decisions that they make. The only thing I was going to say, which I hope is a useful contribution, it's not my contribution to your question, is we're coming to about the limits of my knowledge and externalities. I'm not an economist, thank God. I don't think I'd be very good at it. However, I've just finished a really good book called Rethinking Capitalism by Mariana Mazzucato and Michael Jacobs. There is an outstanding chapter in that by a guy called Dimitris Angelis at the LSE, and it's about actually what are the externalities that we're not pricing in around climate, and what are the different tactics to try and get those either priced in or normed in, if you like. It's really, I'm probably not selling it by the way I've described it, but it's a really, really good article. I'd really recommend it. And now, as you have taken on the function of chair, which I thank you for, would you like to...
Yeah, sorry, can we... Buddy at the back, did you want to ask a question?
I did, but, you kind of killed... don't worry about it. Okay,
Kill the mood.
Okay, sorry, this guy was next. And I'll come to you, bud, then you. No problem. Go ahead.
Doesn't this whole question of externalities come down to having a single methodology and taxonomy for impact measurement, both positive and negative? Could you talk a little bit about the challenges of having a standardised system for impact measurement?
Do you want to take that one? Yeah, go ahead.
So there's a company here in London called the Carbon Tracker Institute, and they've done some work around trying to price it. And the first thing is you have to measure it. So what they thought they'd do is go through all of the oil and gas companies and work out how much stuff is in the ground, and if that wasn't value, if that was seen as risk, what would that measure? And the numbers they came up with was 2,800 gigatons is what's in the ground right now. So if you work as an account exec in oil and gas, you get paid by finding more proven reserves. Not by burning it, just finding it. So that's what you will do until you retire, particularly in the last 3 years. Now, there's only 800 gigatons we can burn before the planet gets too hot. We're 300 in, we've got 500 left. And it's all too hard to kind of like comprehend all that. So the way, the analogy he said to me is, imagine you go to a party, right? There's a group of us, we all go to the party. And one of us has to drive home. And you're driving home. And you're
Designated driver.
Cool, designated driver. I can have, what, 1 or 2 beers.
You have 10, buddy, it's all good.
And I, as the host, say, well, I've already opened all the beers for all of us. And I've opened 12 for you. And you're like, but if I drink 12, we'll crash. I said, but I've already opened them. You have to drink them. That's the equivalent of what we've got with oil and gas at the moment, is those proven reserves in the ground represents undrinkable carbon. And yet the price of the stocks is based on that. So as soon as that realization comes to pass, then why would any oil and gas company then go out and try and find any more?
But what's the price of the fuel?
I don't know.
How's the price going on the fuel? With a lot of reserves and a lot of capacity, where's the price?
The price now is what, $50 a barrel?
Down from 125. So where's the opportunity in this? Where's the opportunity in massive supplies of hazardous materials to burn, right? And really low prices. The missed opportunity is tax the crap out of that and put it into renewables. Function of government.
So that's a really big point there, which is that the UK government right now spends 378 billion on subsidies for the fossil fuel industry and nothing for the renewables,
so
because it's been a nightmare for us.
You know,
it's been a difficult
There's no
problem.
pressure. Look, I look like a capitalist, right? But here's an opportunity. I mean, the impact of doubling the price of fuel on the economy is negligible. The financial impact of rolling that into renewables is awesome. Completely missed opportunity, because we have really low prices in market because of excess discovery. So it's a weird dislocation, but it's a dysfunction, a societal dysfunction, and a government dysfunction.
I agree with you
completely.
And I wanted to say that. And the other thing is, actually, the other missed opportunity is to stimulate innovation. So if you look at, for example, in Europe, where there's been strong regulations on emissions from cars, actually that stimulated a lot of innovation around low emission cars, whereas in the US there's been less pressure on that in terms of taxing on car emissions.
But I have a joke about that. So companies do two different things. They either make more efficient vehicles, or your Volkswagen, you figure out a way to cheat. It's a corporate culture issue.
That is a good joke. However, what I was going to say is actually the US is now lagging behind in terms of innovation in emissions in cars. So Donald Trump can kind of rage all he wants about, you know, cars coming in from other places, but actually it's due to a lack of government intervention there in terms of the environment.
Wait.
Sorry, can I just make a really quick point that ultimately I totally agree with you. Trump can do what he wants, say what he wants, but the markets have spoken. You know, in terms of coal, keeps talking about bringing it back. We're going to get the coal industry back. It's not going to happen. It's, you know, twice the cost of solar, so it's done. So the markets have spoken. That's it. So did that kind of answer your question, buddy? We're going to go to the guy at the back. He's got his shot.
Yes, we've got time for 5 more quick questions.
Let's see. Do you want to give him?
Yeah, no, I will. And then we've got food, drinks, and we're going to leave just before 9. Okay.
Thanks, E. We're coming to you second, bud, and then you too, man.
Hi, so we've got a couple of developers in here. Yeah, we've been working since the 80s, by the way. And also, the one question I'd like to ask is... Sorry. The one question I'd like to ask...
Yeah, just hold the hand a bit lower, bud.
The one question I'd like to ask is, due to Brexit, do you think that, and also Bitcoin and everything, do you think that and also that kind of money has for startups has actually kind of left Britain. Do you think that that British developers should leave Britain and go to other countries?
That's a really good question. I mean, the Brexit fun times question had to come around at some point, I guess, so we'll sort of jump into that. Look, I mean, my job at FundSurfer is entirely about helping our clients raise money. It has been really tough in the past few years in that angel investment rounds have gone down, venture capital rounds have gone up, and it's left a horrendous space at the sort of 250,000 to say 750 to 1 million, which is incredibly difficult. Now, this is no joke, and I doubt anyone will be shocked by this. In 2016, 55% of UK SMEs used credit cards to fund growth. 3% secured equity investment, and London's the world capital of finance, right? So there's clear problems and clear issues, but we are seeing micro VCs popping up now to fill the space. Traditionally got maybe 30 to 50 under management, and they're putting out 500,000 or 250, so they're filling that space. In terms of whether you should leave because of Brexit, I'm not sure exactly what's going to happen with it. I mean, I personally think it was the wrong decision, a bad decision, and I think as a country we should be able to say, yo, this is a terrible fucking decision, let's change our minds. But there's a whole other, section of the country that says, no, it's out of, Europe at any cost, whether that means, people lose their jobs or, Britain falls behind, it's fine, we'll ride out on this glorious buccaneering adventure of, we're going to, bring it back to Victorian times. Well, forget all that, that's just nonsense, So what I would say is, don't leave, buddy. Give us a bit of time, let's see where we go. I mean, France are going all in. They're offering everything. I've actually had a couple of calls to say if I want to move to France, do I want to move FundSurfer to Paris, do I want to move FundSurfer to Berlin? And I'm saying, no, I'm doubling down on England. I'm going to stay here and try and fix some of these problems. It's a difficult one to say, but I would hold the course for now, buddy, is what I'd say.
We are going to Berlin. We're basing some people here, but we're launching in Berlin as well. So I think Europe's important. I think it's a huge, huge mistake, Brexit, but some of what we're doing will help the UK as well. So I just think, ultimately, it's if you're mobile, if you can move, you should move to where your opportunities are. If you can't right now, then innovate. But the innovation and the lack of early-stage capital here is frankly disgusting. It's just ridiculous. The UK government remains the biggest investor in venture capital, as both directly and through the European Investment Bank. And we really need innovations such as crowd platforms, but we need to go beyond crowdfunding, because the easy stuff is easy to fund through crowd platforms, but some of the complex, bigger things that need more capital, frankly, are not. And the venture model, to me, is a complete failure. The 220 10-year model really has had its day. And it might work for some sectors, and it might work for some narrow sectors of the economy, but for things that need patient capital, for things that need more capital, we need to reinvent it from the ground up. And for me, if there were no venture capitalists, if we could positively disrupt them, the world would be a better place. Because we don't just need it in London, we don't just need it in California, we need it in Abuja and Lagos and all over the world. We need access to capital in intelligent forms. So currently, yes, there's venture model. Some venture capitalists do okay. They add some value, but I'm not a great fan.
No worries. It's great. Thanks so much. Next question.
Name's Robert Willis, Executive MBA. Been listening to the interesting debate so far from the panel, from the audience, and it seems as if there's a divide between the social injustices we're seeing around finances, with the 2 billion population unbanked, and this growing disparity between the haves and have-nots. And what is our social responsibility in terms of innovation in the financial services, where we can please a larger population of the human race rather than just satisfying the few. So today was an opportunity. I felt I've already texted Zoe, but it was a bit short notice in terms of having a couple of minutes to pitch a disruptive financial business model that touches all the aspects of the areas that we've been talking about. But I don't want to rain on the panel's parade to do it right now. So if you guys would agree, just shortly after, I'll have a couple of minutes to just obviously touch on the pitch, if that's okay.
See, is that right?
Yeah, absolutely.
Yeah, no problem.
So just the last 2 questions from the floor, please, and then...
Okay.
Good evening. We'll be talking all night about impact investing and externalities. Something I want to mention, as you say, governments are local, but externalities tend to be global. And no matter how big a government you are, you cannot always intervene in other countries. And coming back to what the gentleman said about having a series on Netflix, I actually believe that the best way to go about changing people's mentality and how to better use the money investment is through education. So if you really want to change the world, which at the end of the day, that's what we all want to do. We all want to make better investment toward a better planet. We should first start educating people to make better choices. And maybe to follow with a bit of more brainwashing. That's when it comes to TV ad, because at the end of the day, it's all about that. We see more McDonald's advert or Burger King advert than have your veg adverts. And I think if we touch those first 2 things, education and advertising, then the rest should come with time.
Look, you're dead right. The more you can help with education and marketing, the better. I would add to that, it's very hard to change someone's belief system. Like the way you were brought up by your mum and dad versus mine versus everyone else's here, we believe strongly, even if we're not self-aware enough to know why we believe it, or maybe it's the church or the school or something really bad that happened to you or something really good. So we all carry around these things. And I think the onus is on marketers to not try and change people's points of view, but fit into their worldview and then show what the bridge is from their current worldview and why this new thing fits in with it. Until it does that, and this is the problem I've got with climate change as a failed brand. Like Al Gore did a really good thing. His second sequel is more about hope, but it still paints a picture that it's a long way away and it's someone else's problem. And that's the thing we need to bring back to, it's actually our problem and our solution, and most importantly, it's the biggest opportunity. Like for being a developer in London, to fund you into some work in renewables, maybe you have to move to Bristol or Leeds, and now you're on the high-speed 2 train up there instead of a polluting train. It's actually really easy when you think these things through. But the marketing's not right, and you're totally right. Education will play a massive part in that.
Good. I'd like to thank everyone on the panel. Thanks so much for coming along, and thanks everyone for coming to listen. Thank you very much.